Hello, I'm Simon Evison and welcome to this first episode of Property Box News for 2018. In the first few weeks of the year, no doubt you have been assessing your investment position and thinking about which area of investment to concentrate. Property investment has come under fire an awful lot recently, and many are scared of getting too heavily involved. The naysayers will always, after a sharp intake of breath, warn you off the idea. Now, we've highlighted before why property investing outstrips other asset classes, and amidst all of the negativity constantly spouted by the mainstream media, there are a couple of compelling reasons why property investment remains in the long term a safe and secure asset class to invest your money. So here's why you should stay confident and continue with your investments in property in 2018. The first reason is that rents are linked to wages. The amount a person earns will determine what they pay in rent. Wages generally rise in line with inflation, although not so much recently. In the long term, it will hold true. So, when wages do rise in line with inflation, so does rent go up. Think of it this way. If you're making £500 in rental income now, in 10 or 20 years' time, you'll be making an inflation-adjusted income equivalent to £500. In other words, your spending power remains exactly the same, and there are not many other investments that will do that. Reason number two is leverage. Leverage is a key part to many investment strategies, and in property this performs well in an inflationary economy. Here's an example. You borrow £75,000 to buy a £100,000 property. For the 25-year mortgage term, inflation runs at 2%. The house grows in line with inflation, and in 25 years it's worth £164,000. Meanwhile, your debt stays at £75,000. Properly leveraged property performs well. So do other asset classes like gold and silver, but they don't, and this is the key thing, they don't provide an income. With sub 2% rates available, lenders are giving away money. With all this in mind, it's a great time to leverage if you do so sensibly. Now, to keep a balanced view, it's clear that with wages staying stagnant, there is little room for rents to rise. The government has it in for landlords, and property prices are at a peak with nowhere to go. But these are not permanent positions, and they will change. So long as we are in an inflationary environment, the benefits will remain, and even if we have a period of deflation, it will be a temporary downward spike and will soon bounce back. So when everyone has an opinion about property, and mostly it's negative, keeping a long-term perspective view on things is good. If you allow the doom and gloom merchants to hold you back, you'll miss out many of the unique opportunities and advantages property investing has to offer. So before we go, let's have a quick look at where rents ended towards the end of the year. In real terms, rent fell because the rental inflation was below the national rate of inflation, despite rents rising 0.7% compared to the same month in 2016. And this is according to the Home Let Index. London's drop in rental skewed the figures somewhat, as the capital dropped more than the national average. However, the typical tenancy signed in November going into December was £904 compared to £898 the previous year. So generally speaking, rent increases were modest in 2017, and we didn't see the huge increases of 2016. However, they are long-term growing. So for a more detailed analysis, download the latest Home Let report. There's a link below. And also, if you're a novice investor and you want to get some more education and guidance, there's a link in the comments section below. And finally, if investing in London is not an option, the numbers don't add up and property prices are way too high, then how about looking at the commuter towns? In a recent survey carried out by estate agent Jackson Stopps, the #1 commuter town is, wait for it, Luton. Despite being voted the worst place to live in the UK by Reddit last year, the combined factors of house price and annual growth, train reliability and speed means it comes out on top, with Dorking in Surrey following close behind. Add to that the growth of Luton Airport and an increase in the local economy, and you have a very strong investment market. Tied in third place are Weybridge, Tonbridge, and another much maligned town famed for its industrial estate and paper distributor, Wernham Hogg, and it is, of course, Slough. Like Luton, there's also a lot of local growth, adding another dimension to investment strategy should you choose Slough. That's all from me this time, and we would love to hear from you, so please leave us a comment below, and don't forget, download the Home Let Report, or if you want information about property education, there's also a link below. We'll see you next time. Goodbye.